highway and capital improvements to public infrastructure, or whether it's localized in terms of economically incentivizing new construction. So
Yeah.
really aligning those interests and teeing some of those projects up to be ready for the appropriate layers of incentives as they come along.
Yeah, that's really good. I would say that going into this, we did see a lot of competition on just about every project, and I myself and my investors and my brokerage clients were typically priced out of whatever bid that there were. It was a great time to sell up to this point. I would the last thing I would like to ask about from the investment standpoint is, do you think that there's going to be a when let's just say this stay at home pause is lifted at the end of April? Do you think that the commercial real estate world just picks right back up where it was? Do you think it's going to be some time? Do you think there's going to be a flood of properties that come on the market? Like, where do you think that you can position yourself and maybe some of our listeners here to thrive whenever this does lift? Obviously be patient, but I've had a lot of conflicting kind of conversations with people that are still buying or still actively buying, and then people that are like, well, I'm just going to be on the sideline for this time being. When does that threshold reach for you to say it's time to go back and start acquisitions again?
Yeah, so I think I look at that a little bit differently. I look at it via asset class. And so I think multifamily is an area we all need a place to live.
Yep.
Whether it's affordable housing, whether it's luxury housing, whether it's anything in between, I think housing is going to remain a staple. And the recovery is going to be the quickest in that category. And we're going to have some loosening long-term of supply and demand.
Yeah.
So some buyers who bought projects at the very highest price in the market, and their margins and their projections are maybe really compressed right now.
Sure.
Might not survive, or they might be looking for an exit. Folks that have owned properties long-term and who just don't want to deal with the operating risk any longer are going to want to sell.
Yeah.
So I think that's one area that we're going to continue to see a little bit of loosening, but not a flood of new inventory to the market.
Yeah.
I think we're going to see some loans that become in default status over this period of time, especially as it relates to the appraised value and the debt to equity ratios required.
Sure.
So I think that's something that also may open up, but nothing like what we saw in 2008.
Okay.
I do think that we're going to see a continued steady growth with slightly different return on investments or cap rates, slightly higher cap rates in the industrial space, but again, nothing significant. If anything, this pandemic has taught us all how to buy everything online a lot faster.
Yep, absolutely.
So for those folks who weren't making purchases online, like it just sped up that curve.
Yeah.
And that has the opposite effect on retail. I think the retail service industry, the types of retail goods that you can purchase, like you mentioned, the national tenants that provide groceries, that provide hardware,
Yep.
And that provide the day-to-day goods, and the restaurants, all of those have a long-term space in our bricks and mortar environment, but probably with smaller footprints.
Yeah.
So I think that's going to be a big continued shift. And I think your retail properties are going to be underwritten at the tenant level. So who are the tenants? How was their business impacted? And what's the overall health of the asset on a very tenant-specific basis? And I think you're going to see cap rates go way up for retail properties that have unhealthy tenants, and they're going to be somewhat stable for properties that have healthy retail tenants.
Yeah.
Restaurants are going to struggle for some time because they can't make up for all of this lost activity. I think the other asset class that's going to continue to be challenging, but maybe there'll be some really great opportunities that come out of it, is the hospitality industry. So the hospitality industry, similar to retail and restaurants, has been obliterated.
Sure.
there will be a lot of foreclosures, I think, in that space. And for quality assets in quality markets that can be repositioned and stabilized, I think you'll be able to find some bargains. And
Yeah.
as an investor, I think that that's one of the categories I look at 3 to 6 months from now. I also look at retail properties that have that same potential.
Right.
So
Yeah, no, that's really good feedback, and I think that everybody needs to heed that advice. So let's shift a little bit into owning a small business, medium-sized business. You have a lot of folks that you oversee. You guys have a lot of payroll. You have a very diverse kind of income stream from the property management to construction services to brokerage. Maybe paint the picture on how you guys are staying sane during this period of time. Maybe for some real estate brokers out there that are a little uncertain that this may be the right kind of industry for them, and how you personally are waking up every day and staying positive and smiling and working through this thing.
sure. Well, as you mentioned, we have a variety of different team members in our operating recipe. And luckily, all of our properties have been somewhat stable over the past 30 days. And certainly, we're in the best position heading into this that we could have expected.
Sure.
So we have not had to lay off a large portion of our staff, but we have had to make layoffs,
Yeah.
particularly in the hospitality industry, which was a very difficult choice for us.
Sure.
I will tell you that the silver lining, whether it's our hospitality properties or other businesses out there, small business owners that we've talked to, this is a wonderful time to reinvent yourself. So if there were things that you were thinking about changing, this has given you almost a clean slate to experiment with different operating strategies as you come out of this.
Absolutely.
I think we are lucky to have a leader within our organization who has some hospitality experience in times of crisis. And the pent-up demand, especially as all of us have been stuck at home, is going to be real. Now, I think that one of the advantages of being in a market like Kansas City is that we're a drive market, and we're not going to major tourist areas. I think that's going to continue to be challenging. I don't think people, for example, are going to get on a cruise anytime soon.
Sure.
Kansas City provides a really great environment to visit family, to stay at small to medium-sized boutique hotels, and to stay out of massively crowded environments.
Yeah. Yeah.
So I think we see recovery here sooner. And just from a sanity perspective with our team members, we've been able to sharpen the saw. So we're focused on a lot of education and sharpening the saw type of initiatives, getting back to the basics within our brokerage team, being prepared to handle volume as we come out of this.
Sure.
And for those who are in the brokerage industry, I mean, I have seen over the past 15 years, and certainly some of the folks who have been in the industry for 20, 30, 40 years would attest to the fact that as brokers and as advisors, we make money when the economy is going up, and we make money when the economy is going down because our clients need our advice.
Yeah.
When there's no shift or when there's a plateau, nobody really needs our advice.
Mm-hmm.
And so we have strongly encouraged our brokerage team members to really reach out to clients and prospects alike to see where we can plug them into resources, where we can give them advice, and where we can share best practices, because that's what they need right